The House Financial Services Committee has kicked off its first round of hearings over the GameStop saga that pits small investors against Wall Street. And I've got Brigida Santos here to talk about it. Brigida, look, the House always wins. And the House in this situation is Wall Street. Wall Street has sent out their flying monkeys to protect their territory here. I don't know how to simplify it even more. It's all about Wall Street calling in favors from legislators they've given money to so we can have hearings and protect our little fiefdom. For those who don't remember, how did the GameStop, how did it begin? Take us from the top of the story.
Sure, I'll break this down. Look, this all started in January when a group of individual investors rallied on the Reddit forum Wall Street Bets to basically push up the price of GameStop stocks that had been shorted 140% by hedge funds. Now, all this means is that hedge funds had borrowed other people's GameStop shares and immediately sold them at what they believed was the high price at the time. Now, they thought GME shares were overvalued and that they would drop in price by the time they needed to repurchase those shares to return to the brokers that they borrowed from, which is required by law. By selling high and repurchasing low, they'd essentially profit off the price difference. But the tried and true strategy backfired because retail investors knew that the hedge funds had heavily shorted GameStop, reportedly just by looking at public information. So those retail investors went on Reddit. They encouraged each other to buy GME shares on Robinhood, which then just drove the stock price up as high as 1,600% at one point. Hedge funds were then forced to buy back in at the higher price because they had to return those shares that they borrowed from the brokers. And of course, this just ended up driving the cost up even higher. In total, the scheme cost GME short sellers over $6 billion in losses.
That's the good news. The good news is where it landed is all of these sharks, these predators from Wall Street that are in the business, by the way, of destroying small businesses so they can make more money on the back end by selling short. See it all the time. They all got their butts kicked, and that's a good part of the story. So I wonder, what is Congress investigating right now?
Well, surprise, surprise, Congress is now all of a sudden investigating market manipulation. The committee is looking into whether Robinhood changed its trading rules to favor its biggest Wall Street partner, Citadel Securities, over small investors when temporarily blocking users from buying shares of GME and other retail-boosted meme stocks. Now, that's good. If Robinhood investors had continued to buy and boost up the price of GME shares, Citadel might have lost a lot of money. That's because Melvin Capital, the investment firm that Citadel previously invested $2 billion in, lost 53% of its portfolio from its GameStop short position. So it's good that they're investigating Robinhood here. Now, during the hearing, Congress heard testimony from executives at Robinhood, Citadel, Melvin Capital, Reddit, and other major players. It also heard from Keith Gill, aka Roaring Kitty. Now, he's the YouTuber who promoted GameStop shares to those retail investors that really got them into this investment.
Yeah, I mean, the Wall Street thugs thought they were going to make a lot of money based on the failure of this company, GameStop. So at the end, they're going to have a big payday. Well, no. All of a sudden, you had a groundswell. I call it economic populism, where people say, damn it, I'm so tired of Wall Street's hustle. It's a constant hustle. The House always wins. Maybe this is a time they clearly didn't win, and it's something that might have potential to work in the future. Has Congress proposed any solutions to protect average investors rather than their pals on Wall Street?
Some ideas floating around currently include imposing a 0.1% tax on stock, bond, and derivative trades, but Wall Street opposes the proposed tax, and it's likely going to lobby very hard against it, which is why our laws continually favor Wall Street over Main Street. But as you said, this is a populist moment, a bit of a class war, and Main Street investors are taking matters into their own hands. They're now investing in a new kind of capital market and turning to cryptocurrencies and decentralized finance, where the lending, borrowing, and trading of crypto assets can actually be automated through smart contracts. Now, in theory, the peer-to-peer system is fair. Unlike the system we have now, transactions cannot be frozen, prioritized, et cetera, for certain individuals and entities.
I hope Wall Street continues to get their butt kicked, and if legislators come to the aid of them and not the average American, I think there's going to be a lot of outrage, because this is going to happen again. This story is not over. Thank you for joining me, Brigida.